What's up everyone, my name is Anthony, and in this video I'm going to do some updates on the broader stock markets and then talk about the individual stock picks that can help us understand price action and what may happen in the future or so. So just in terms of what we've been getting in terms of SPY and the triple Qs, we've had this sell-off since we hit kind of the all-time highs right around 454, and then we sold off in this pattern right here. And the one thing I want to point out is that the initial start of this downside is very choppy. So the possibility of this being a zigzag like an ABC is, I do not really see that's a possibility because ABCs won't really have this type of choppy price action. This shows to me that we're in a WXY. And so this whole WXY forms your W wave. And now we're working on this X wave upwards, as you can see here. And because we've gotten this upwards push, we can actually subdivide this price action pretty clearly. So I'm going to zoom in on that right now. So just once again, we're working on this correction here and we're kind of zooming in on this bullish part of the correction phase. So since we bottomed right here around 428.8, something like that, we moved upwards for an A wave, and then we formed a very clear triangle. So A, B, C, D, E for the B wave. And now we're working on a decently extended C wave. And this C wave, you can very clearly see an impulsive subdivision because, as you know, A waves and C waves have impulsive natures to them. That means they form 1, 2, 3, 4, 5 structures. So whereas the A wave here, you can't really see that impulsive subdivision as well, which is perfectly normal for corrective waves. The C wave can really show that impulsive structure. So we have a wave 1 up, wave 2 down, wave 3 up here with that gap up, and then continuation of that gap up for the wave 3. Then we're now working on this wave 4 retracement and rejection of some of the key Fibonacci retracement levels. And now we should be working a little bit more for the push upwards for wave 5 of the C of this X wave. And then we should come down for another leg of downside. So there is something I want to mention about this ABC correction. So that forms the X. So there is unfortunately a possibility that we could have an ABC, and then this would form a W wave, and then we move downwards for an X wave. So we get this downside move, but then we push upwards again for a Y. So that would form another X wave right here. It's just this X wave would subdivide into a WXY. So that is a possibility. The way we can kind of watch out for this is when we have this downwards push for the X wave, if it looks non-impulsive. So for example, if it looks like this, some kind of choppy non-impulsive move, then that may be indicative that we can come up a little bit higher once again. So I'll be watching out for that, and of course I'll signal in Discord if I see that as a possibility. Then that might give an exit opportunity for some of the puts that we're in. But either way, this leg of downside here should bring some profitability for those in bearish positions on the indexes. But just throwing that out as a warning, right now I don't think that is the case. We could just come up for an X wave and then start the second leg of downside. So now in terms of getting that estimation for where that leg of downside could take us to, so let's zoom out a bit, go down to the 15-minute time frame. So we start off here at the top of the bull markets pretty much. So 454, drag it down to the bottom here. And let's say that we end our fifth wave. Let's aim for a pretty high target. So let's say it ends at 448. So that would be the 0.786 retracement level right here of that W wave down. So let's take those levels. So we have the 1-to-1 retracement level right here at 423. So that already takes you pretty low on the indexes. Of course, you have the 0.786 right at 428. And then you have the 0.618 at 433. So even these very conservative extension levels for this second leg downwards will take you pretty far on the indexes. So that's why I'm very interested in continuing to add to bearish positions on the indexes. So right now I am pretty heavily leveraged in puts. I did enter like just short of this 0.5 retracement level. And for the X wave, we have continued to push upwards into more retracement levels as we were up around like 1.6% on the indexes at one point today. But of course, we pushed a little bit off from that. And I'm not worried about being in bearish positions throughout this upside because eventually we'll get this leg of downside. The only thing that would make me a little bit more uncomfortable is that if we do start forming a WXY, because that would not really change anything about a second leg of downside. It just makes it take more time, and that could cause a little bit less profitability due to theta decay and just taking more time to have the second leg of correction. But we'll get to that when we do start to see some downside. So that's going to be just the major subdivision of this corrective move upwards. As you can see, this stuff here is not impulsive. It's not really starting any new 1, 2, 3, 4, 5 structure. For example, like if we try to label this, so let me go down to the 3-minute time frame and let me explain to you why we know this is not an impulsive structure upwards. So if we try to do a 1, 2, 3, 4, 5, something like that, if we try to label it as that, first of all, this is completely invalid because you cannot have triangles in a second wave. So when you're immediately hit with a triangle like this. This is a very clear triangle pattern, a contracting triangle. There's no impulsive count that can really give you this structure because you're not allowed to have triangles in wave 2s. So whenever you see a triangle after a push to the upside immediately, then that is pretty indicative that you're in some kind of corrective state. So once again, this move is not impulsive, which is good. So I'm just looking out for that. We should have a little bit more push to the upside, and then we'll come down again for a leg of downside. And the exact same scenario is true for the tech sector, which is here in QQQ. So we topped out here for the pretty much the bull market top for now, and we are working on a WXY, very choppy start of that. So this kind of invalidates the possibility of it being a zigzag ABC. We have a complex correction WXY pattern bottomed out here. Now we're working on an X wave to the upside right here. So we have kind of like a WXY. That's what I'm seeing right now. So an exact same subdivision for the tech sector. We have an A wave up, then a triangle A, B, C, D, E for the B wave, and now we're working on a C wave. And the C wave subdivides impulsively, very clearly. So a wave 1 up, wave 2 down, wave 3 up, wave 4 down, and now we should work on a wave 5 of C. And if you even zoom into this wave 2 and wave 3 here, you can subdivide that wave 3 as well into a 1, 2, 3, 4, 5. So there are very clear subdivisions within this corrective structure. So that's why I'm more confident about the trade, because it's pretty clear subdivisions in terms of the indexes. So yeah, I'm definitely looking to continue adding to bearish positions. I'm already very happy with my current amount that I'm in. I actually am down quite a bit today just because the indexes are up, but this is okay because X waves, you can't really predict exactly which Fibonacci retracement level it's going to reject at. It has a very high chance of rejecting at 0.5 and 0.618. As you can see, we're already starting to reject and find trouble going through that, but I wanted to get in just to make sure I didn't miss out on it. So I'm okay with my cost average, but I will continue to add as it goes up to the higher Fibonacci retracement levels, and I think it's okay in the long term. So next, move on to the VIX. So VIX is confirming basically the analysis from before. We are gravitating right towards these trend lines here of support. So because we have that last bit of upside left to the indexes, I think VIX could push slightly lower and could find support right here, and then we'll bounce right up back to these levels when we did have that initial dump of the indexes. So just a little bit of more cooling off of the VIX. I would keep an eye out for these levels right around 16.5. And when we do hit those, we should find some support. Maybe try to push under, but then fail, and then we push upwards again. And that upwards push would correlate to this downside in the indexes right here after this X wave is complete. So VIX is confirming so far. Now let's go on to Moderna stock, or MRNA. So I had a lot of questions about this. It is really trying to stall out its next leg of downside. So I know there's a lot of stuff here. So let me go down to the 5-minute time frame. So overall, we can zoom out a little bit. So here we had the top of this B wave. So we're in an ABC correction, keep in mind. So we moved up here at the all-time highs. So kind of just from up here, an A wave down, B wave up. This B wave, once again, is really trying to stall out that next leg of downside by taking on a WXY. And this is just a way of the stock trying to stall out any decisive move downwards. And once again, so we're starting to move downwards for this C wave. And the C wave is taking on a wave 1, and now working on a wave 2 up. And this wave 2 is once again taking on a WXY, with there being a lot of internal WXY subdivisions, which is a little bit annoying to deal with, but that's just the stock really trying to stay afloat. Eventually it's going to fall because you can't really stall out forever. But I anticipate that this next leg downwards for the wave 3 of the C wave downwards, that should correspond with the downside expected in the markets, because mRNA, as you know, is part of NASDAQ. So if we see NASDAQ go down, we should see Moderna also go down as well with it. So I am anticipating a pretty hefty downside move for the wave 3 of C. And once again, we're gravitating towards these areas of support here pretty low. So maybe anywhere from 320 to 360, same price targets as before. Nothing has changed. It's just the stock is really trying to stall out here, as you can see with this very choppy price action. So Moderna is still looking okay. I may add to any bearish positions if we get confirmation of this wave 3 in the future. So now let's go into Google. So Google, I really think stocks like these are important to mention because they can kind of help get a better understanding of the markets. So if we zoom out a little bit, just for context, we are working on this impulsive subdivision up here. So we have a wave 1 up, wave 2 down, wave 3 up, wave 4 down, and now we're working on this internal subdivision of the wave 5. And it looks like we completed that up here, right around the upper Fibonacci extension target. So that forms your wave 1 up, wave 2 down, wave 3 up, wave 4 down, and then a wave 5. And now we're working on this kind of ABC correction structure, and that corresponds with the markets as well. Just that downside move was triggered right along with the markets, and looks like we're working kind of on a B wave here, and we should have a C wave downwards, and this ABC structure would form your W wave, and then we'll have an X wave up, and then we'll have a Y, and that would bring the stock for sure down to these support levels here, right around maybe 2,200, something like that, to 2,400. Anywhere here seems like a good buy area for the stock after we correct. But I do feel pretty bearish about the stock. Just any tech stock in general right now needs to correct, and it looks like it is starting that initial process of the correction. Of course, you could also label this along with the markets as a WXY, and I think that is probably the more accurate count. So you have a WXY coming down, and that would form your W leg, and then of course you would have an X and Y after that. But this W wave is appearing to subdivide into a WXY just like the markets. So Google is pretty much mimicking the markets right now and kind of confirming this bearish structure because we have completed this impulsive structure upwards. So next is Nike. So this is another example of a stock that has finished its bullish impulsive sequence and is now working on correcting. So over here we have a wave 1 up, wave 2 down, wave 3 up, complex correction, very extended for a wave 4, and then we're working upwards for a wave 5. And then we topped out right around the 1-to-1 extension at 171, that area we rejected, and now we're heading our way downwards. So I believe Nike also kind of failed earnings as well, or some kind of news came out, and it's heading downwards. So it is working on this ABC structure once again, just kind of like Google and the indexes. You could also label this as a WXY because this move is a little bit choppy, but I think because it's a little less choppy than the indexes, this looks more like an ABC, a zigzag to me. So that means it's going to get more of a harsher correction. So we could see an ABC move downwards. And once again, this is just to emphasize that a lot of stocks are finishing and have already completed their bullish impulsive sequence and are simply just now correcting. And that would lead to more downside in the market. So things are looking bearish across the board. So same thing for Tesla. So Tesla is a little bit different in terms of the wave counts because it completed its bullish impulsive sequence a while ago, back around January, February, and then we worked on a very complicated WXY pattern. So we had initial ABC move downwards, which formed your W wave, and then we worked upwards for an X wave. And once again, this X wave really tried to stall out. It went ABC, then a W, and then an X, and then a Y, and then an ABC. So this is kind of what I'm a little bit fearful of in the indexes. I don't want it to form this kind of similar pattern. I just wanted to do an ABC forming the X wave, and then it's done, and it will come down for a correction. I hope it doesn't extend, but because, as you can see here, Tesla, so let me draw out the retracement levels. So if we form that bottom of the W wave, we see that Tesla rejected right around the 0.618. This is right here, the 0.618 retracement level. So once again, we are hovering right around there for the market. So just to emphasize how X waves like to stop around the 0.618, and we did interact with it quite a bit, tried to touch it, and we keep rejecting. So that's the fact that the markets are already at that level is good news, and hopefully means that we won't continue to extend upwards for this X wave anymore. So except for the wave 5 of C, of course. But yeah, so Tesla is looking bearish. It's always been looking bearish since we're pushing it for this X wave. We're now, I think, a short position in Tesla makes a lot of sense. Really good risk to reward. As you can see here, we're right on the expected areas of resistance. So after we top out for this X wave, we should form some kind of ABC structure for a Y leg, and this could be pretty steep. So because we kind of had some trouble moving down here and some trouble moving up here, I think once it starts selling off again, starting that first leg down, buyers and sellers are going to realize this, and they're going to start triggering more selling, and that could really lead to a strong enough correction in Tesla, and of course that would influence the markets and cause them to drop as well. So a lot of individual stocks are turning bearish and completing and hovering around resistance areas, just waiting to reject. So once again, I am looking very bearishly on the indexes and individual stocks, especially like the ones I mentioned. The only thing, like I said, I just want to make sure that this doesn't extend too far. But it is good news, honestly, that we are at some of the upper retracement levels, because that means the markets have already had enough upside where they don't really need to extend any longer, and they're ready for another leg of downside. So, and just once again, just in terms of time, so I mentioned here, or I actually didn't mention it, but I have it written here that the time that it took for this Y leg downwards, or this, so this WXY for the W initial move was around 1,530 bars. And just to keep a heads up that the X wave can typically form or take 61.8% of the time of the W wave. That's not always the case. I don't really like using Fibonacci ratios for time because they can be a little bit unreliable, but that's just a guideline. So that would be around 590 bars, something around here. So it would take something maybe around like the 27th to the 29th of September to finish this X wave. That's what the time is predicting. Of course, it's not going to be 100% accurate, but that's just we could have a little bit more of stalling out here for the X wave, maybe a couple more trading days until it decides to fall again. So just a heads up. That's why I'm aiming for at least October's and November's, preferably for puts. And of course, I've signaled those in the Discord, and we'll continue to enter trades if I see a good opportunity. So that's just going to be a comprehensive update on the markets and what I'm seeing right now, especially with this newly found subdivision and of the X wave. It's really helpful to be able to subdivide each part as much as I can. So that's just going to be an update. Hope that helped you understand the price action and what's going on. For now, I just say hold on to your bearish positions if you are holding them. Things are looking so far looking fine. So yeah, thank you so much for watching, and of course I'll keep updates and as always in the Discord. So, and I'll see you in the next video.